This is the Weekly Outlook here at XM.com. I'm Christina Marujos, and joining me today is investment analyst Marios Hadjikyriacos. We'll be having a look at this very crucial week ahead of us. We have three major central banks meeting, a lot of data coming out, and of course we're entering what we've been talking about for months, Brexit week. So let's start with that. Now, the UK is expected to leave the bloc on Thursday. However, a general election might be announced any moment. So how do you see the week playing out for the UK?
Where to start? So we are most definitely going to get an extension, and that will probably be followed by an announcement for a general election on Monday. According to reports at least, Boris will try to push it on Monday. Now, what does that mean for the pound? I think that's a positive. Even though we've seen the currency retreat a little after the announcement, maybe on election uncertainty, let's say, I believe that most potential outcomes from a general election are positive for the UK and therefore for the pound. Now, either Boris gets a stronger majority and therefore he can push his deal through parliament, or the opposition gains power and they want a second referendum. So I think that the pound's relief rally is not over in the near term at least, and the focus moving forward will probably shift to opinion polls as the investors try to gauge who might come out on top.
Now, let's move into the U.S. The Fed is holding its policy meeting this week. It's widely anticipated to cut rates. So what do you think? Will we see a 25 basis points rate cut?
Most definitely. The market probability for a rate cut next week is 90%, and the Fed has a very strong habit of not disappointing the markets. Now, they are going to cut, but since that is more or less fully priced in already, the reaction in the dollar will depend mainly on the signals they send about future rate cuts. On that front, I think they will not pre-commit to anything. I think they are going to keep their cards close to their chest, and Chairman Powell might say something like, this is the third time we've cut now. This stimulus needs a little time to work, so we might take a step back and monitor the economy. Of course, we will act if necessary, but we don't see any real need to cut again in the next months for now. So that would argue for a positive reaction in the dollar, in my opinion, because it might be a slightly more hawkish message than the market is currently anticipating.
It's interesting to have a look at the Fed because the Bank of Japan is also holding its policy meeting. Now, its board is reported to be quite divided on how to proceed regarding easing. So do you think the BoJ could follow the Fed's footsteps and cut rates this week?
It's a very, very close call, even for the markets. The markets are assigning a 50% probability for a 10 basis points rate cut, which literally means that investors are split. Now, there are strong arguments on both sides. The domestic economy has been weakening. Inflation is close to 0% again, which is very worrisome. But the Bank of Japan also has a massive stimulus program in place already, and therefore it doesn't have a lot of rate ammunition left. So it might prefer to save its last few policy bullets, let's say, for a stormier day. Now, the latest reports suggest that the board is leaning slightly towards holding its fire and not doing anything at this meeting. So if that is the case, that would argue for a spike higher in the yen on the decision.
Now, Canada has just finished with its elections. Its economy has been fairly strong in the past few months, so one would argue that there is no need to ease policy. What do you think we'll see at the Bank of Canada meeting on Wednesday?
Nothing. Can we move on? I'm just kidding. So the economy has been very strong. So that argues for the Bank of Canada to just stay on hold in the coming months and do nothing. The trade war hasn't really caught up with the Canadian economy. Now, in any case, I think Governor Paulos will signal that the bank remains firmly neutral. There's no need to adjust policy at any moment for now, unless, of course, the data deteriorate in the future. So that would normally argue for a stronger loonie, which is already the best performing currency this year, we should say. But I don't think the reaction at the policy meeting will be massive. The market already expects the Bank of Canada to stay on hold in the coming months. So, it wouldn't be any surprise for the markets.
And Marios, what should we be on the lookout on the data front this week?
It's a very, very busy week. The most important day will be Friday, when we get the US employment data for October and the ISM manufacturing PMI for the same month. These are crucial data points that will reveal how the US economy entered the fourth quarter, and in a sense they might be even more important for the dollar than the Fed policy meeting itself. Now, before that, on Wednesday, a few hours before the Fed, we will also get GDP data from the US for the third quarter. Now, in Europe, we'll also get the third quarter GDP and the latest inflation data for October. And finally, we will also get Australia's inflation figures for the third quarter on Wednesday.
Marios, thank you for joining me today. And thank you for watching the Weekly Outlook here at XM.com.